What is up, Bitcoiners? Welcome to this episode of Bitcoin Magazine Podcast. It's CK, and this week I interviewed Lyn Alden. A month ago, she put out a fantastic piece talking about the most common misconceptions about Bitcoin, and she absolutely obliterated them with cold, hard facts from first principles. I brought her on here to walk through each of them one by one, so that way you can learn about exactly how to dismantle these misconceptions, you could call it FUD, and how to, essentially you could even just share this with anyone who is maybe Bitcoin skeptical. And she really does a fantastic job of making the case for Bitcoin, not being overly bullish, but really from first principles laying out why Bitcoin works and why you can expect it to keep working and why you can expect number to continue to go up as Bitcoin appreciates and people start to learn about it. Before we get into the show, I want to talk about this show's sponsor. This week, this episode is brought by Level. Level is the next generation Bitcoin bank. In the episode, a lot we talk about the transition from trading Bitcoin to banking on Bitcoin and using Bitcoin as a true store of value and as a true money. And that is what Level does. It's a new generation of exchange where it's actually a bank that just uses Bitcoin. It's like a new age challenger bank. So you've seen these banks around, online banks that cut costs and provide banking services at a free or better rate. And Level does this too, but also with Bitcoin. They directly integrate with Bitcoin, and they are bringing out awesome features like depositing your entire paycheck directly into Level and then saying, hey, I want this to be 80% Bitcoin, 20% fiat, or whatever, or I want this all Bitcoin, and then I just want to top up my fiat account so that way I always have $1,000 to spend on my debit card. That is how they're rolling. They are thinking from a Bitcoin centric, Bitcoin as my unit of account standpoint, Bitcoin as my store of value, and they want to build financial services, banking services for people who are ready to live in the Bitcoin world. So go to lvl.co, check out Level out. They have a super intuitive app. I'm a big fan of their mindset. I spoke to their CEO on Bitcoin Magazine AMA. So check that out on our YouTube page if you want to learn more about Level. And yeah, check them out. And without further ado, this incredible conversation with Lyn Alden. Welcome, Bitcoiners. Welcome back to another show of Bitcoin Magazine podcast. I am interviewing Lyn Alden for the second time, and I could not be more excited. Lyn, welcome back to Bitcoin Magazine podcast.
Thanks for having me back. Glad to be here.
So, Lyn, I think it was like 3 weeks ago, you wrote a fantastic article where you teased out some of the most common misconceptions about Bitcoin, and then in just a fantastically articulate manner, point out from first principles why these are in fact misconceptions and why Bitcoin doesn't actually have some of these issues. I think it would serve our audience really well, Bitcoin fanatics, to kind of hear you articulate this in audio form and kind of go one by one, just because I'm sure that a lot of their friends and family are talking to them about Bitcoin and have some of these misconceptions or concerns. So it could be very helpful for them to have this content to point to, as well as, learn from. So that's kind of what I wanted to do with you here on the show. I guess before we jump into the specific topics, is there anything that you wanted to kind of say regarding the piece, like maybe motivations or anything like that?
Yeah, absolutely. So, I first wrote about Bitcoin in my research service back in April of this year, pretty briefly. I mean, before that, I wrote about it back in 2017, but my first really bullish piece was in April of this year. But, that was kind of a quick update within a broader research piece. And so I really wanted to give Bitcoin the time it deserved to kind of fully flesh out my view, rather than just kind of a short version of why I'm bullish on it, why I'm buying on it. And so in July, I released a big public piece on Bitcoin, and it was called something like 3 Reasons Why I'm Investing in Bitcoin. And that was kind of my core first principles kind of outline of why I'm bullish on it now, especially compared to how I was in 2017. That got a lot of press, and it did pretty well. But of course, then you start getting emails like, "But what about this? Or what about that? Or what about?" And of course, even if they weren't asked to me, I would see debates online or comment sections about some of the potential drawbacks of Bitcoin. So I kind of considered it a part two to then say, okay, instead of keeping answer these emails, I'll pull a lot of it down into one big article and try to get some of my thoughts out to kind of address in one spot a lot of the questions, risks, misconceptions that people have. Most of them are rational. Most people, they want to understand their investment before they dive into it, even with a small position size.
Yeah, absolutely, absolutely. And I love a Parker Lewis quote. He says that Bitcoin is very counterintuitive until it becomes intuitive and then hyperintuitive, just because you start reorienting your world from a Bitcoin view. Um, so I definitely think that these kind of points are rational to have, and that's why it's amazing to have someone like you really touch on them in such an articulate way. I guess let's just get into the first one. We've all heard this as Bitcoiners: is Bitcoin is a bubble. How do you think is the best way to kind of address this concern?
A lot of that's understandable because people look at the linear chart, and so you just see basically, if you look at the linear chart, you see kind of Bitcoin like a flat line that looks near zero, and then it spikes all the way up to 20,000, then collapses, and then has this big consolidation. And until the last several months, when it came up and retested those highs, it looked like it was never going to get back to that previous bubble high. Now, this simple fix, for anyone listening, look at it in log form first of all, and then also draw the halving points on that log chart, and then you'll see basically this like rhythmic algorithmic increase in price that looks a lot different than it looks like on that linear chart. And so I think that's probably the best answer to look at that and to show that really the bubble in 2017 was not really any different to the prior peaks in previous halving or launch cycles, and it kind of goes to that same kind of cycle every 4 years. And the only reason that one stood out is because that's the most recent. And so on a hugely exponential chart like Bitcoin's price, that's the only one that's visible on a linear chart. And that's the only one that really caught the broad media attention, whereas the first two happened when Bitcoin was a much smaller asset. So I would just implore people to look at the log chart, look at the halving points, and then make up their mind from there, whether it's a more rhythmic increase or an actual bubble. I mean, you can argue that it's a local bubble, but it's not like the super bubble that many people, say it is.
So you brought up the halving several times, and you instructed people to actually layer out the halvings on the log chart. Um, what's your opinion on the halving? The halving is something that causes a lot of debate in the Bitcoin and cryptocurrency community. Like, does it depict what's happening in the future? Does how where does human action come into that? Like, how can this thing be programmably going up in value? Can you kind of give some comments on that?
Yeah, so I think it's extraordinarily well designed protocol. And it's interesting because it could have been that the first person who invented cryptocurrency, could have invented all those hard parts. But then when it goes to designing details of the protocol, he could have done something totally different, and it just doesn't work out as well. So it's actually really interesting that the other details, like a halving cycle or the difficulty adjustments, all those kind of details kind of work together so well. And I think that's one of the things you find out about Bitcoin as you learn more and more about it. And so with the halving cycle, basically what it does is it breaks the supply demand equilibrium that starts to exist in the several years after the previous halving. So eventually, Bitcoin has this thing, after halving, it tends to have a pretty strong bull market in the next year or 2 years. It has generally a blow off top, and then it has a crash and a period of consolidation, and it eventually kind of finds an equilibrium. And just when it does that, the new supply gets cut in half, and that just throws a wrench into the equilibrium that just developed. And of course, that's it's well telegraphed in advance. I mean, people know, they're not surprised by the halving; they know it's coming. But it's not until several months after halving that those liquidity issues start showing up, where some percentage of people are buying and holding, and there's only a certain percentage they're willing to sell at that price. Eventually, that supply reduction drains liquidity out, and just like any commodity, really, you start to get a supply demand imbalance, and you start to see price appreciation until some of the cold storage like hodlers are willing to part with some of their coins and kind of bank some profits.
Yep, everyone has their price at some point. And it's kind of incredible, like seeing this process go out a second time, at least for me, just because it seems like it's something that's programmed, but then you like it can't be that programmed in. So it's just interesting seeing it again. But we'll see next year if it really does kind of fully pan out. I do want to jump to the next question. So again, this is a very common misconception. Bitcoin has no intrinsic value. Gold can be used in jewelry. It can be used in electronics and industrial uses. You know, Bitcoin, it's just information, has no industrial or no intrinsic value. What's your response to that misconception?
Yeah, sure. I'll briefly touch on the last point just to finish it off. So I also, when I talk about Bitcoin, I like speaking in terms of probabilities. And so, I can never guarantee what the price is going to be like in any given halving cycle, what's going to happen next year, what's going to happen 4 years from now. But basically, so far that halving cycle's played out pretty well. And in addition to it actually having played out, the logic of why it plays out makes sense. And so when I speak of, the halving cycle, I say, okay, this is my base case for what's going to happen in the future. I consider it more surprising for certain, outcomes to not happen, right? So it's kind of all about probability. And that's actually one of the things I'm watching is to see, when will Bitcoin eventually have a halving cycle that say doesn't work out the way that the pattern did. I think that, that could change some perceptions about it. But in the meantime, to the extent that that pattern remains algorithmic, it's something to keep watching and it's just a really fascinating outcome. And you can just kind of align probabilities around it. And then, so as far as Bitcoin's intrinsic value, that was one of the shorter sections of my article because that was a deep dive I did in my first Bitcoin article. And so I mostly referenced back to that one, but I still wanted to have that addressed because I know people that not have read the first article will bring that up. And so what I really focus on is the network effect and the scarcity. And so Bitcoin's intrinsic value is that it's essentially a store of value that is highly portable and has many of the properties of money and saving in a way that is kind of like gold in some ways better, right? Especially the portability aspect of it. And so, uh, one of the hangups I had back in 2017 was that even if Bitcoin is has some value, what about the fact that there's so many other altcoins coming along? Like, couldn't this whole marketplace be heavily diluted? And even if say $1 trillion comes into the space, what if it divides equally among the top 10 protocols? And you just kind of have that diffusion of capital. And so my emphasis was on the network effect that Bitcoin has. So it's kind of like how anyone can create a social network, but have fun trying to compete with Facebook that already has the self-reinforcing feedback loop of already having a ton of users. And so, it's sometimes it's possible to create a new one. It's just extraordinarily difficult. And the ones that generally have that network effect are really hard to dethrone. And you can go down to any sort of protocol, like even not a company, just a protocol that becomes kind of commonplace, in the programming world or in the tech world. Once something achieves enough adoption, even if something comes along that in theory is better, it ends up being worse just because no one uses it, and therefore it's not as good as the one that's already kind of widely distributed and self-reinforcing. And so that's how I view Bitcoin, is essentially analyzing it in a similar way you'd view any other network.
Okay, that was a fantastic answer. So you had a specific order in your article, and I've actually reordered it a little bit because I think some of these are more like 1.0 questions, and then followed by the last three, I'd say, are like 2.0 questions. So
Sure.
um, the next one I have here is Bitcoin is too volatile. So this is definitely a 1.0 question. And then not to say that volatility is not a real thing, it is truly a real thing, and even OGs get affected by it. But at the same time, fearing the volatility is definitely something that new people to Bitcoin often do.
Yeah, so basically, without, Bitcoin has come a very far way in a decade, a little over a decade. And that's largely because it had volatility. If it wasn't a volatile asset, it never would have been able to get as high of a market cap as it got now. And so the volatility is more a feature than a bug. And what I like to point out is essentially that Bitcoin is an emerging store of value. So a lot of people, Bitcoin's just like how like a small cap tech stock is more volatile than a large established blue chip dividend paying consumer products stock, right? So it's this new company that can come along and it can go up tenfold, it can go up 100-fold, or it might not work out. And so that's that volatility that's inherent in that technology company. And so Bitcoin, compared to say a store of value like gold is the blue chip store of value, and Bitcoin is this emerging store of value that is competing in partially the same space, but also both of them are also competing against a sea of bonds and other currency and other ways to store value. And so this new emerging one, people say I can't use it as a store of value because it's volatile, and that's true because that's an emerging store of value. So in the current phase of its life cycle, it's not a conservative store of value. It is a aggressive a view that is basically going to keep growing and become a store of value. And so it's kind of that feedback loop where it attracts a different type of investor now than it will if it becomes, say, far larger and its volatility goes down. And so investors can, you know, work around that by saying, okay, I see why it's well designed as a store of value, but because it's young, it doesn't quite have the full store of value property yet. But instead, in some ways, it's better because it's a growth of value rather than just a store of value. And so investors can allocate with a smaller position so that it doesn't throw off the volatility of their net worth, as it would if they put a much larger position into it.
I like the growth of value, and Stanley Druckenmiller and several other fantastic investors have kind of expressed a similar idea. It's like it's gold, but it will outperform gold. So it's exciting to them. Can you talk a little bit about the type of investors that Bitcoin is attracting at this point? Because I think that in the last, maybe call it 2 years, Bitcoin's appeal to maybe more institutionalized investors has really, kind of 180.
Yeah, I mean it's as it's grown, it's attracting more and more investors. So at first, and it's kind of like that, people compare it to the adoption curve of any new technology. First, you have the developers and like the hardcore enthusiasts, and then you get kind of early adopters, and then you get kind of semi-early adopters, and you go from there. And so with Bitcoin, first you had programmers and all these people that were really hardcore into it. Then you started to get kind of early investors, and then semi-early investors. Overall, it skews into a younger and more tech savvy demographic than say gold does, for example. But there's a wide range of people that invest in it, especially as it grows and reaches more people. And then this year and the past couple years have been kind of pretty big for institutional money, so hedge fund money coming into it. Now there were, even among them, there were some early ones, like Fidelity was very early, and so there are a handful of Wall Street types that were very early on that. But really, the 2020 has been kind of the year for the corporate and the hedge fund investment, and that's always interesting to see. I also think it's catching on a little bit among the gold investor community. I think more of them are opening up to the idea of not replacing their gold with Bitcoin, but considering it alongside their gold in a similar way that they often invest in silver alongside their gold, and they often want to invest in other natural resources as an example that they're willing to incorporate into a portfolio.
Yeah, a lot of times I feel like Bitcoiners are telling gold bugs that they're wrong rather than trying to like align where Bitcoin and gold are very much along the same thesis of natural money and kind of removing money from the state and that value to society. So I definitely am really excited to kind of see gold investors kind of seeing it along the lines of, with their gold investment instead of against.
Yeah, I agree, and I think that's I can see why that competitiveness occurred, right? Because they're both in some ways competing for similar parts in their portfolio, but they're going for different markets, and in many ways it's still very early for gold because gold is still a very small allocation to most institutional portfolios compared to how it was, for example, in the late 70s, right? So I think even in that space is still getting started, and there are some that are just kind of they don't get Bitcoin, so they're very resistant to it and they can be hostile to it. On the other hand, you have, yeah, like you said, the whole Bitcoin crowd of saying basically like, it's gold 2.0, it's gold's antiquated, use this entirely instead. And I think there's like a happy medium in between them where you can have both in a portfolio.
So, speaking of institutions getting into Bitcoin, part of Bitcoin's investment thesis is that it is getting to the stage where not one government can stop it. And that is another one of these kind of misconceptions that you've pointed out is, or at least the critiques is, the US government will just ban Bitcoin if it gets too big. Can you address that?
Yeah, so I think, I've seen it expressed a couple different ways, and the most common way I've seen it expressed is that the bigger it gets, the more likely the government is to ban it. And I hold somewhat of an inverse view where it's easier to ban it when it's small, right? So you can never quash it because it's a decentralized. You can't destroy it, but you can make it illegal to own. You can ban the on ramps into it. You can put it into the black market essentially. But basically, once it gets big enough and hits escape velocity, it's much harder to ban, right? So once hedge funds own it, once institutions own it, I've referred to it as once the donor class is invested in it, that's a much harder thing to try to disrupt than if it was a $10 billion thing that tech enthusiasts play with. And you can just be like, we're banning it because it's used in the Silk Road, like all that kind of older narrative. Once it's widely held among portfolios, and let's say it gets up to $1 trillion market capitalization, that's increasingly challenging to ban because not only are you going against the retail investor crowd, especially a segment that is specifically holding it to protect themselves from say government overreach or things like that. So it's a type of demographic really that you don't want to push too much. And then also if you start to get big investors coming in, those are investors that have the ear of politicians. Those are ones that donate to politicians. Those are the ones that politicians are generally very careful to disrupt too heavily. And so I think basically the larger it gets, the harder it is to stop, and the more that politicians realize that they want to have Bitcoin related companies in their country and paying taxes and generating profits and employing people.
So, what is the likelihood, in your opinion, that the U.S. really 180s and takes a aggressive or anti-Bitcoin stance?
So I think the probability of an outright ban is pretty low. I think I'd like to see Bitcoin get over a $1 trillion market capitalization. I think that would give it more security in that regard. But overall, I think the probability of an outright ban is low. I think the things to watch out more are more regarding regulation around it, like trying to make it harder to self custody or things like that. I think those are kind of the battles that some regulators might be more willing to step up and try to do. But there are people that explore in detail the kind of the regulatory risks around it, or the legal risks, and also some of the legal precedences, right? So, Supreme Court decisions in the past that relate to Bitcoin, and then they can give a much more rigorous, argument for, say, what kind of things you'd have to go through in order to make Bitcoin illegal, because you have to go up against certain Supreme Court precedents as it relates to other types of code and things like that. So, overall, I consider pretty low probability for an outright attempt at a ban.
So, and you mentioned this, like one thing that makes Bitcoin unique is the fact that you can custody it rather easily yourself. Um, and also that is kind of a choke point, right? Where people are buying and selling, you can stop withdrawals. PayPal doesn't have withdrawals at all, just out the gate. They're trying to have a walled garden with Bitcoin
Yeah.
in it. Um, what's your fear of that? That's definitely something that many Bitcoiners or people in the Bitcoin community are concerned about.
So I don't think it's a problem to have some providers have that approach, right? It's only a problem if it tries to be mandated that to make it harder to self custody for companies and consumers that want to self custody. So for example, there's some entities like Swan Bitcoin that they instead they pretty much recommend self custodying. They give the option that they can custody it, but they also recommend self custodying. But then on the other side of the spectrum, you have ones like PayPal or last I checked, Robinhood. They don't give you the option to withdraw. And so, I think that those types of services can be a useful thing in the sense that they get people interested in the asset. It reaches more people. It can be good for the price, obviously, but then for whatever subset of them kind of research more about it and realize that some of the unique properties of it are really because you can self custody it. Some of them might transfer out. They might sell their Bitcoin on that platform and go to another platform, or maybe more people will say, critique PayPal and say, hey, we want to be able to have this feature. And so I think, the market can decide over time, and it's fine to have both as long as, government is rational about the types of regulations it tries to impose.
Two things expanding on that, and I don't want to get too hung up on it, but what are the chances that you think that these kind of like there could be a mandate to that you can't withdraw your Bitcoin? And on the flip side, why is it for a noob? Why is it so important that Bitcoin is something that can be self custodied?
So, I mean, one of the powers of Bitcoin, arguably the main power, is that it's totally decentralized. And so unlike most other say cryptocurrency networks, there's no central point that there's no organization that it really go after to try to stop it. And people can still transact in it even in places where it's legal. Now, of course, they take on then personal risk for doing so. It enters the black market. It stops institutional money from going in, but it doesn't stop the ability for people to choose to do that. And so it's basically it's people's money, right? So it's designed by the people for the people, and so people can self custody it. And there's really not a ton that the government can do other than legal threats or things like that. And then it's even hard to prove that someone has it. It's kind of actually like when they made gold ownership illegal. It was in the United States. It was really hard to actually enforce. I mean, they had pretty steep penalties if you were found to be holding gold. But there actually weren't a ton of prosecution just because they didn't spend the resources to go around getting everyone's gold. It was just kind of threat of legal force. And so with Bitcoin self-custody, it's kind of a similar approach, except even more so. And the I think basically it's hard to prevent self-custodying, but it's possible they could dissuade major companies from making it easy to self-custody. But I don't fully look into the details of the regulatory. I think there are much better people than me that are really kind of following some of the legislation, following some of the politicians' opinions on those subjects.
Yep. Okay. No, that very fair. And I'm sorry to dig too deep in that. Okay. So I think this is where I'm moving to the 2.0 criticisms, right? So this is for someone who they've done a little bit of research. They kind of get how Bitcoin works potentially. And often you hear this in the altcoin crowd, but Bitcoin doesn't scale. How can Bitcoin scale only X amount of transactions, less than 10 transactions, per second? How can Bitcoin scale?
Yeah, so I basically what I showed in the article is that there are trade-offs that any payment or store of value system has to make. And the big ones are security, decentralization, and transaction throughput. And so if you take a company like Visa, they optimize for transaction throughput and then to some extent security. Those are the two that they're maximizing for, and then they're sacrificing entirely decentralization. And they're just saying, okay, we're going to go with a centralized model, and we're going to build this super fast payment transfer system. And that's fine for the purpose that it's trying to do. But with Bitcoin, it's instead optimizing for being decentralized and highly secure. So it's a stateless form of digital scarcity that is out of the reach of any individual government, any individual organization. And so it's something that in that sense is about as secure and decentralized as you can possibly get. It optimizes 100% for those variables. And then the trade-off that it makes is that it's not very scalable. And so the number of transactions that the Bitcoin network can do per unit of time is extraordinarily low compared to something like Visa. However, you know, although it's limited in the terms of the number of transactions it can do, it's not limited to the value of those transactions. And so there's no limit on the amount of value that can be transferred per unit of time in the Bitcoin network, just the number of transactions. And so that leaves open other layers that can build on top of Bitcoin. So whether it's Lightning, whether it's other solutions, all of these other layers can come on and say, okay, we have this highly secure, decentralized base layer, and we can build other layers that sacrifice some of those attributes in order to get more throughput for smaller transactions. And that, I think it's probably going to become more important if Bitcoin does continue to expand in market capitalization and usage.
Yeah, I mean, and arguably we're seeing PayPal, even though maybe Bitcoiners won't like it, they're adding their centralized, super fast payment network on top of Bitcoin. And ultimately, at some point, they are clearing to the Bitcoin network. So,
Yeah, exactly. Yeah, as it gets big enough, the existing payment processors start to incorporate it, right? So instead of being, eaten by it, a lot of them will do their best to incorporate it. So PayPal's an ideal example, but I wouldn't be surprised to eventually see all the major payment processors get much more kind of Bitcoin native in that regard. And there are downsides to that, but it also is good for penetration, market capitalization, and de-risking it from a regulatory standpoint.
yeah, my take is that Bitcoin is permissionless. So you can't stop all of them from serving it too.
Yeah.
That's just how it works. All right, next one. This is, I think, one of the strongest, what I would consider FUDs out there. And I think it's a very strong anti-Bitcoin narrative, even though, in my opinion, it's very wrong. But Bitcoin wastes energy. Can you address this? Again, I think this is the number one most compelling argument against Bitcoin.
Yeah, so I tackle that from two aspects. One is, okay, it does take a lot of energy, but then the question is that energy put to good use? And so I made the comparison to gold, that gold takes an extraordinary amount of energy to identify deposits and then extract it from the ground. So in order to get one gold coin, you have to move literally thousands of pounds of rocks and dirt and rubble and all that. And then you have to transport it, refine it, stamp it, and verify it, and then you have this gold coin. And that represents basically a massive amount of accumulated energy in that one gold coin. And that's why it has value around the world. And Bitcoin is similar. So Bitcoin is this massive store of energy. And all of that mining energy goes into verifying the network, protecting the network against attacks, and keeping it as the most secure of all the different crypto assets. And so that's the big question goes to whether or not that energy is worth it. And so far, the market is saying yes. The market's saying, okay, it takes a lot of energy. It takes the energy of a small country to operate this thing. But in exchange, it gives the world a decentralized store of value, that's stateless and that, gives people that choice around the world. So I argue basically from a virtue standpoint that I think both the market states that it has enough value and that I personally think that the argument is there that it uses that energy appropriately. And then the second point is, even though it uses a lot of energy, the question is, does it use useful energy? And so Bitcoin tends to optimize for either low cost energy, renewable energy, stranded energy, any place in the world where there's like overbuilt energy production capacity compared to what's being used. So it could be overbuilt dams in China. It could be stranded oil and gas fields. I know there's a company like Great American Mining that focuses on that. There's all these ways to basically arbitrage, energy that has been, in some ways cut off from it's where the demand is. And so in that sense, it's not competing with, say, we're not building a ton of new like power plants just to mine Bitcoin, at least in most parts of the world. It's mostly the Bitcoins going around and finding these areas of energy that are otherwise not put to good use.
Yeah, in my part of my thesis is that eventually Bitcoin will be telling us where to build the power plants and building and kind of allowing the profit incentives to kind of build out our energy infrastructure. So I know that's kind of a moon, that's kind of a moon goal for Bitcoin in my mind, but I do think that it could have massive implications. So the last thing that you put out there is, how should I buy Bitcoin? I kind of rephrase this as to, why should people dollar cost average instead of trade? I think there's a misconception that, and maybe this is because all the early platforms allowing you to buy Bitcoin kind of shape themselves, in the manner of like a brokerage account rather than, a bank app or something like that. But, how should people think about investing in Bitcoin? Why do you recommend DCA instead of like maybe, trading?
Yeah, so I think that's a good point that they could have modeled themselves after banks, but instead they model themselves more after exchanges, which makes sense because at their heart they're exchanges because they're bringing buyers and sellers together. But that instead of kind of incorporating the mindset of a bank, they incorporated the mindset of a trading system, and it makes sense because it's a highly volatile asset in dollar terms and other currencies. So I can see the natural direction to go in was that more exchange-based model, and but that it opens up a trap because people they hear about Bitcoin, they overcome enough of their skepticism and they say, okay, I want to own a little bit of Bitcoin. They go on an exchange and then they get into the altcoin casino. They're like, well, Bitcoin went up this much, but this other one is like the 18th biggest cryptocurrency and that went up even more this year. What like, and so you get deep in the rabbit hole of like trading different like altcoins, and then you lose money and then you say, oh, it's not worth it, it's all a scam, even Bitcoin. And so it's basically by putting them all together by association, it kind of opens up the mindset of being a trader. And so I mean there are, say, a handful of people that can trade professionally with a very kind of well-defined rigorous system if they want to try to skim profits off the top. But for the vast majority of people, the answer is to buy and hold it, and if you're bullish on it for fundamental reasons, if you think it solves a problem, if you think it's going to appreciate in price for one reason or another, then for most people the answer is to buy it, hold it as a percentage of your portfolio, and then if you want to, then to continue adding to it on a regular basis. And so I don't think there's a case to never sell. Like say you put a single digit percentage of your portfolio in Bitcoin, and it has one of these halving cycles and it goes up tenfold. Now Bitcoin's a disproportionately large percentage of your portfolio. I think it can make sense to maybe trim some and rebalance elsewhere if you're uncomfortable with that position size and that volatility. But that's different than trading. It's not, you're not trying to time tops, time bottoms, aggressively get in and out of the market, get into multiple altcoins. And so I think for most people, the answer really is about finding ways to minimize fees and to basically just build a position and to let this thing play out.
Awesome. Awesome. Well, Lyn, I really appreciate your time. I think that this was a very dense and compact show where people can, again, address these extremely common misconceptions. So I have high hopes for this piece of content of being very evergreen and useful this upcoming 18-month cycle. For those out there who haven't heard from you, where can they find you? And do you have any last words for our audience?
Sure. I'm at lynalden.com. I have a free newsletter. Feel free to sign up for that. I'm also at Twitter at Lyn Alden Contact. And I just think, approaching this, I guess one of the things I come at this from an independent analyst perspective. So there are a lot of people within the cryptocurrency space or within the Bitcoin space that talk about Bitcoin. And so my view is to basically come at from an outsider's perspective and say, okay, I like to invest in multiple different asset classes, and here's why I'm bullish on Bitcoin. And some people, that helps them get over any sort of hurdles they had. If they're only hearing voices from the Bitcoin community, sometimes it's good for people to hear, voices from outside the community and to say why, here's why I'm bullish on it. And at the same time, I'm also happy to say, here are the risks. So it's not something I put, for example, 100% of my net worth in. I dial it up or down based on my own particular conviction. And so a lot of my view is basically why it's a good reason, why it's good to not have any, like why it's good to get off zero. In other words, like why it's good to have a non-zero Bitcoin position. So I even if I felt like I didn't fully was on board, I still want a 1% Bitcoin position, because worst case scenario is that 1% goes to zero. Best case scenario is it goes up multiple times and makes a difference for a portfolio, even as a small allocation. And then, for people that are, have more conviction, either because, they've done a ton of research or they don't mind the volatility, they can always choose to increase their allocation as I have. And so I think people have to basically just, dial their exposure to their risk tolerance.
No, I think that that is absolutely fantastic advice. And the phrase I like to use is asymmetric risk to reward profile. So that's exactly the one risk 1% to potentially gain, 50% of your portfolio value. So it makes a lot of sense when you think about it that way. Lyn, thank you so much again for coming on the show. For all the new listeners out there, please make sure to follow Bitcoin Magazine. You can follow me at CK_snarks. Please give this show a 5-star review and a share. Much appreciated, and thank you again.